At Black Creek, we manage and develop real estate across 32 markets in the U.S. We've done it for 25 years. So we're in touch with the demand drivers, and interest rates is a key factor in demand.
Yeah.
Commercial real estate's an income-oriented asset class. Allocations are also a really important demand driver, probably as important as to why real estate will continue to perform.
Just people saying, oh, I have stocks, I have bonds, I need to have some real estate, and that kind of thing.
It is. I mean, I would parse it a bit further, which is institutions. They've been consistently focused on the asset class. 10, 12 points of their allocations have been in commercial real estate. They're going up a couple hundred basis points. Individuals are well under allocated, so they have less than 1%.
Yeah.
And they manage 10, 15 trillion in aggregate.
Individuals do.
Individuals do. So we think the demand drivers, low interest rates, growing allocations.
So if I'm an individual and I say, okay, I'm not going to take advantage of low rates to buy my primary house, but maybe commercial real estate, what areas, how do you do it?
So financial advisors today have a lot more tools at their fingertips to give advice to individuals. We think about our job is to find properties, and we have a fairly bottoms-up approach. So at Black Creek, we really think about it as buying in intersections.
Mm-hmm. Literally traffic intersections or intersections?
So main on main as opposed to a market.
Okay.
You know, I'll give you an example. In the Bay Area, we've not even completed a warehouse that's 30 miles outside of the center of the city, allows single-day delivery to the consumer close to the port of Oakland.
For a company such as Amazon, or?
You know, we actually have tenants that are circling around it, and it'll be leased 6 months before completion.
So you're actually building on spec because you know there's so much demand in, for example, retail to have that one-day delivery, whether you're them or Target or Walmart or you name it.
Yeah, we do. So we do, as I said, both development and acquisitions. We think it gives us a better perspective on our tenants and what's important to them. We've been one of the largest industrial developers, and so we're able to find properties that fit our clients' needs well.
How tight is it for warehouse space right now? What's happening in that area where with every announcement, you know it means millions more square footage? In fact, I read for every $1 billion of online sales, 1.25 million square feet are needed to hold inventory.
Yeah, there's a multiplier. So the tube of toothpaste that ends up at your door, it usually stops in 3 or 4 different warehouses. And that multiplier effect has really been a key driver. E-commerce, as you know, is 10, 12% of retail sales. I'm sure you agree 5 years from now it could easily double.
Well, I'm just curious what the effect of tariffs has been. We talked last week about how trucking has been hit really hard simply because it's throwing off the typical flow of traffic. You know, there's hoarding and then there's delays and there's all sorts of questions about pricing. Is that hurting the space? How is that rippling through the sector?
Well, so on the contrary, actually, with the tariffs on the horizon, we've seen through our logistics chain an uptick in activity, and that gives us a sort of on-the-ground perspective. Separately, I would tell you that tariffs, tweets, those are public market effects. Private real estate is pretty resilient, and it doesn't have the correlations and the volatility of the stock market and other public
But you're
markets.
not seeing any just economic fallout one way or the other yet.
We haven't yet.
Yeah.
It's early, but we haven't.